Good morning and welcome to the Killik & Co market update. It's been another turbulent week in UK politics. Government bonds initially steadied at the beginning of the week after the new Chancellor reversed the majority of the tax cuts. But volatility re-emerged yesterday after Liz Truss resigned as Prime Minister after just 45 days. The process to appoint the next Prime Minister is underway. Potential candidates will require 100 nominations from Conservative MPs, so only 3 candidates can potentially emerge. Rishi Sunak is currently polling as the favourite. Sterling has given up most of the gains made earlier in the week, and expectations of future interest rates have moderated, following comments yesterday from the Deputy Governor of the Bank of England, where he suggested that interest rates may not rise as much as investors were anticipating due to the potential economic impact. The UK base rate, which serves as a benchmark for all lending activity, is currently at a 14-year high of 2.25%. The Bank of England are expected to hike rates by 0.75% in November, and financial markets are predicting that the central bank will continue hiking rates to a peak of 5% in May 2023. UK inflation data was released earlier in the week. Prices increased by over 10% in the 12 months through to September. The jump in inflation exceeded economists' forecasts as food prices increased by over 14%. This is the highest reading in over 40 years. The Bank of England has forecasted inflation is expected to rise to 13% by the end of the year due to the impact of higher energy prices. More encouragingly, the central bank forecasts that inflation will begin to moderate early next year and will revert towards the 2% target level in around 2 years' time. UK retail sales data was released earlier this morning. Consumption activity continued to contract as retailers cited the impact of inflation on sales. The data has further fueled recessionary concerns, and this has weighed on sterling this morning. China's 20th Communist Party Congress has been taking place this week. Delegates have convened to approve the country's policy direction for the next 5 years. This is a very important event in the context of the global economy, given how China's domestic policies have impacted economic growth and the country's increasingly assertive foreign policies have unsettled markets. The Chinese President Xi is expected to secure a historic third term, breaking the norm of a 2-term limit. The Chinese president emphasised that China will continue to strive for peaceful reunification with Taiwan, but also implied that China reserved the right to use all measures necessary in pursuit of their ambition. Taiwan is critical for the global economy as it dominates the world's supply of semiconductor chips for electronic devices. As you can see in this chart, the Chinese equity market has materially underperformed broader emerging markets over the past year as economic growth has continued to slow. Despite the economic cost of zero-COVID policies, the Chinese leadership remains committed to the approach. It's been a busy week for US companies who've been reporting third quarter results. The corporate profits of S&P 500 companies are expected to have increased by nearly 2% in the third quarter. Encouragingly, the majority of companies which have reported so far have beaten consensus expectations. Banks are the first companies to report in the US. The higher interest rate environment has been beneficial, as banks lend out considerably more to borrowers than the amounts which are deposited with them by savers. And the rates charged for lending are higher than the rates offered to savers. The difference between the two is referred to as the net interest margin. JP Morgan, which is the largest American bank, reported very strong profits from lending activities, which compensated for some of the weakness in investment banking activities, as mergers, acquisitions and stock listings have fallen considerably over the course of the year. Goldman Sachs also reported better than expected results. Whilst investment banking revenues also fell sharply, the fixed income trading activities materially outperformed expectations as traders benefited from the volatile market conditions. Moving to the earnings calendar, we have a very busy schedule of earnings next week. Technology companies will start reporting from Tuesday, with results due from Microsoft and Alphabet. Meta, Amazon and will also be reporting over the course of the week. And that's all from us this week. If you do have any questions or comments on today's update, please contact us by emailing info@killik.com. Have a great weekend and we'll see you soon.